Hey guys, this is Mabel Perez from Berkshire Hathaway Home Services Florida Network Realty, and as promised, I'm here to discuss student loans and home financing. I'm going to go ahead and jump right in. When you're interested in purchasing a home, many of us will reach out to mortgage lenders to get financing to purchase a home. When we do this, what they'll do is pull our credit report to see whether or not we're good risk for them to take. In those credit reports, they will view what our monthly obligations are in terms of car payments, credit cards, student loans, personal loans, and any other financial liabilities. And then they'll also, be looking at, income verification. And what they're really trying to do is see, how much we make and how much our obligations are to, one, determine whether or not we can afford a home, and two, if we can't afford a home, how much home can we afford? So you may ask, how do student loans kind of fit into all this? Well, it's pretty simple. They're going to show up just like any other debt that you owe on your credit report. The only difference and the only snag that people hit is that if you owe $40,000 on your student loan, and your student loan servicing company indicates a $0 monthly obligation payment that's due, the mortgage lending company is not going to accept a $0 monthly obligation payment into their calculation when they're looking at debt to income ratio. What they're going to do is by default assign you a monthly payment for that account. And by default, that formula is 1% of the total amount owed. So if you owe $40,000 in student loan debt, 1% of that is $400. The home mortgage company will assign you a $400 monthly payment for your student loans, and that amount will be used to calculate your debt to income ratio, right? So $400 is a lot of money, and some of you may have just graduated from college or maybe switching careers, etc. So my advice to you is to, one, know your credit more than anyone else. Go online, Credit Karma, Credit Sesame, reach out to the credit bureaus directly. Look and see how your student loan servicing companies are reporting the information to the bureaus. Look at how much you owe and look at what they're reporting as your monthly payment obligation. If your credit reports indicate a monthly payment obligation of 0, get it fixed. Talk to those servicing companies and agree on a monthly payment amount. Obviously, the goal is to get it less than 1%. Let's say you agree on $150 as your monthly payment. Ask them to report that $150 payment to your credit report. Okay. Once they start reporting that to your credit report after 3, 4, 5 months, and you ensure and verify that that has been updated and reflected, you're in a much better position to look at homes and to look at home financing. Because now when lenders are looking at, your numbers and qualifications and debt, etc., they're seeing a $150 student loan debt in terms of monthly obligations instead of a $400 debt. People may not think it's a big deal, but you're really freeing up $250 that can be used toward the purchase of a home. So hope the information was helpful. If you have any specific questions, reach out to me directly. I'm happy to kind of listen and talk through, your unique circumstances. So, happy Wednesday. Well, I guess it's Thursday. I'll dedicate this video to my night owls, but hope you found this helpful, and special shout out to Luke, Kingser from Prosperity Home Mortgage, who was very patient with me and answered the million questions I had last week. So thanks again for tuning in, and I'll see you soon.